Foreign direct investments are often renowned for their immense effects on the Philippines' economy. Although rather small due to historical limitations, in part due to national policies, it has still been rained upon by numerous groups and governments, as voices and capitals from the nations of Japan, South Korea, to the US and China have participated in helping drive the economy of the archipelago nation. These investments are estimated to be upwards of about millions to tens of billions of dollars every year. And obviously, the main purpose of why the Philippines receive such investments is due to one big factor. With the term profit, foreign countries or private corporations head towards the Philippines to invest in a business, an idea, a startup, to, well, ultimately make money. But the thing is, however, oftentimes not only due to the national policy on foreign investments that limits them, but there are also many more countries out there that present better returns on investment for foreign capital. Southeast Asia is a region competitive for this money. Vietnam, Indonesia, and Malaysia are three nations that have seen huge foreign direct investment flows in the past years, driven by their booming economy. In fact, throughout the entire world, the Philippines and its private corporations are even at times prioritizing its international presence more than its domestic investments, meaning some corporations, people, or even government officials have chosen to invest in some place around the globe rather than put the capital back into the national economy. Jollibee Foods Corporation, a prime example, has been opening up its fast food chains globally, and even at times noted that it is actually far more profitable for them to do so, rather than in their local markets. This might be why we have seen a huge number of acquisitions done by the parent company, buying stakes in US-based smash burgers and multinational companies Coffee Bean and Tea Leaf. They, however, are not even the sole contributors to a change in investments around the country. We may discuss further what overseas investments of Filipinos look like in a short while, but this can already tell us something. Some Filipino-based corporations, and well, money, have been steadily flocking and choosing to invest elsewhere around the world, and not within local borders. Does this indicate that opportunities are found better elsewhere, or could it have a deeper meaning? Well, to understand why, we must first take at who and what these overseas investments look like. As noted earlier, one of the prime examples is Jollibee Foods Corporation, locally known for their big fast food chain and their recent massive global acquisition. They, according to its 2021 annual report, have more than 3,200 food brands around the Philippines. This includes its other food businesses, such as Chowking, Red Ribbon, Mangi Nasal, and more. Globally, however, they have around 2,653 food brands, the majority of which are stationed across Southeast Asia, China, and North America. This figure is almost the same as what it holds within its local borders. Better yet, however, without any official numbers, its international investments should already exceed its local investments. After all, opening up branches in the US is so much more expensive than what it would be when they do it in local lands. Now, another prime example is SM Investments, locally known for their massive shopping mall business, which also has a profound international presence. Has reported that while it has 79 malls in the Philippines, it also has 8 malls in China. Although relatively small compared to Jollibee Foods Corporation, SM, however, has only done so by opening up its own brand. In the year 2001, where it opened its SM brand in Xiamen, China, Jollibee branched out even by buying a huge competitor already, known as Yonghe King from China, where the brand itself is known to have over 350 food branches today. These two companies are then also joined with a long list of many more Filipino-based companies. Ayala Corporation, through its subsidiary known as ASEN Rewardables, its sustainable energy business has a huge geographic presence, having wind, solar, and geothermal assets across Vietnam, Indonesia, Australia, and India. International Container Terminal Services, the big global port management company that is owned by Filipino billionaire Enrique Razon, has a presence across 20 countries and almost every continent. San Miguel Corporation, through its subsidiary Petron Corporation, its oil and gas, has operations in Malaysia, which is in fact a big one. Alliance Global Group, through its subsidiary Imperador, the beverage company, has acquired White & McKay, one of the biggest alcoholic beverages in Europe. What is more surprising is that startup funding or venture funding, initiatives brought in by big corporations to help fund innovative businesses, are even seeing some of their capital going into foreign businesses. The early stage incorporation, known as Kickstart Ventures, a company backed by Globe Telecom and Ayala Corporation, has provided tens of millions of dollars to Singapore-based companies. And well, the list goes on. Obviously, this should first be applauded, as it shows how capable the minds of Filipino investors have become. Their international presence is ultimately bringing Filipino-based money and brand to go global, which will also, of course, help the entire economy through various means. That, however, is not what we're trying to see. What we can see is that there are obviously at times more opportunities to invest elsewhere. Numerous times have these companies reported that they are reporting better return on investments in their capital abroad, rather than when they had invested it locally. Yes, this statement and their reports can indeed tell us that there might be better opportunities elsewhere. Hence, they've turned some of their investments through diversified means. But that does not really mean that they should ultimately migrate their entire company. One of the reasons why this has happened is that it is now unnecessary to expand locally. Take, for example, why should Jollibee, which has 3,000 and more local brands in the Philippines, open up another 1,000 or 2,000 branches, when their brands are already across the entire archipelago nation? Or why should Emperador try to sell more alcohol brands, when in fact, they're one of the biggest sellers already? In simpler terms, what we mean is that local investments are now unnecessary, as they have already reached a plateau of how much they can sell and reach. Because of this limit to the purchasing power of Filipinos and its population, they would rather use their cash to invest it around the world, and not just leave it in their bank lying around and being drained by inflation. But we still can't really miss out on the fact that there really are bigger opportunities elsewhere. Southeast Asia's overall economy is a vast growing playing field. The Philippines is just one small part of it. These are, of course, rarely conversated about, and topics of overseas investments stray away from the normalcy of local policies. The main objective is to lure in foreign capital, and if there's even a small hint of outward foreign investments, it would oftentimes be seen as a move by big money. Well, as a matter of fact, big money is not even the only key institution driving such a change. Even the government itself is in many ways also favoring outward foreign investments. Why that is, however, is largely debated. Questions pertaining again to whether it is safer or even better to invest abroad are a painstaking conversation. But numerous government-owned or controlled businesses have some form of international investments. Take, for example, the government service insurance system and the social security system, an insurance and pension fund that has assets combined worth over 1 trillion pesos. These have big money places globally, whether that's in the equity markets, currencies, fixed income assets, or others. Its local investments are even insignificant. Out of the 89.1 billion pesos the GSIS holds, only 4.6 billion pesos actually go into funding local infrastructure government initiatives. This big money is even enough to fund a ton of government plans without having to rely on foreign capital. Surprisingly as well, the GSIS reported even a stunning gain from peso-dominated infrastructure investments, stating that they came out with 5.1 billion pesos worth of yield. Why their investments are still rather small, however, is a big question, tasked by the heads of state and controlling executives of GSIS and SSS. Now we can attribute many successes and challenges to the overseas investments by the Philippines. Whether done privately or publicly, these are at the end of the day done to make a quote-unquote profit. Whether it directly or indirectly benefits the very Filipinos, however, it is difficult to see its quantitative measures, but qualitatively it should not be frowned upon, as it still will in many ways benefit a Filipino. Anyway, what do you think?